Hello, good morning and welcome to ET Now's The Newspaper Show with me, Varun Hirimath. Before we go any further this morning, let me remind you that the newspapers are completely safe. All personnel at the presses are using all the required sanitary norms and are sanitizing, and your papers as well are being handled with extreme care. So if you are interested in once again getting your own copy delivered home, please go to wantmypaper.com where you can explore options for the same. But with that being said, we're now ready to get you into the stories for this morning, and we're going to begin with the top 10 generic, and beginning with the number one story this morning, with Adia to invest 5.8 thousand crores in JIO platforms. Now this is the Abu Dhabi Investment Trust. I don't need to mention them. They're a very renowned global investor and a very positive name creeping into this counter. Number two, trucks in the fast lane in May as curbs ease. So that's again self-explanatory. Transportation's picking up. FIIs are back, infusing 23,000 crore in 7 sessions. So that just shows you what a turn we've taken. Earlier on, a couple months ago, we saw one of the largest FII selling months, and now it really seems that they're back with a bang. Number 4, Astrazeneca approaches Gilead for merger talks. Both big pharma companies exploring new drugs, conducting their own COVID trials. Interesting merger if it would happen. Number 5, reviving growth, non-negotiable. So Kotak, Mr. Uday Kotak came out and did a webinar at CII over the weekend, and we also played that for you yesterday. So he is really coming forward, one of the big wigs, and saying that growth should be our number one agenda right now. Moving forward, working to get projects back on track. That's something coming in from L&T. 7, plans afoot for India's first coal exchange. So we heard about all the, everything that was going on in the coal industry. They opened it up to privatization. Now it seems that a coal exchange may be something they're looking at. Global COVID death toll passes 400,000. So this is a very key figure, and it's quite a large figure as well. SERO surveys result expected this week, so that's self-explanatory. And Black Lives Matter protests go global. So after what we saw with George Floyd and everything it's triggered off across the United States, it's now crept into Australia, parts of Europe. It seems that people all over the world, wherever there's a minority population, are feeling the effects of what that tragedy really did to the US. But moving forward now, let's get you a brief of what's happening in the markets. The T-bill yield spike on cash flow stress. The top 10 firms have added 2.46 lakh crore in market cap in the last couple months. The brokerages have cut SBI's price targets post Q4. That's quite surprising because the stock actually up on Friday. So contrary move you're seeing there. FPI Association urges government to reduce taxes. Again, self-explanatory, but we'll see how the government responds. And demand back to let NRI companies trade on D Street. So this is something as well that will be keenly looked out for by our market participants. Let's now get you a brief of specifically what's happening in the corporate world. You have hotels baffled by Delhi diktat to stay shut. So I don't know why they're baffled, but baffled, excuse me. Hotel companies feel that they should be allowed to open and that they've been shut for long enough. So that's an arbitrary call. We'll see what happens. 2 PE funds in talks to invest in Coffee Day. So that's a really interesting piece of news. A really good Indian franchise, a solid brand, but just no value on the exchanges. Maybe with the entry of some strategic investors, this counter can get reinvigorated. Airtel, Vodafone and JIO change operating models. So that's something to look out for in the telecom space. Focus on pure play e-commerce. That's the Flipkart CEO coming forward and saying that. And satellite industry calls for 100% automatic FDI. So that's another key story coming in this morning. But back to what we spoke about earlier on, and perhaps the biggest development of today and what has been in our markets for the last month is the constant money raised by Reliance. They keep on divesting stake in JIO, and this will ultimately help them delever. This is now the 7th announcement we've seen in barely any time. It seems that Adia, that's the Abu Dhabi Investment Trust, will be picking up around 1.16%. But someone who tracks this story very closely from our team, Ajay, is now with us. Good morning, Ajay. Welcome to the show. Take it away.
Well, this is the 8th major transaction being announced by JIO platforms in a matter of weeks. During this period of lockdown, they've struck massive deals totaling almost $13 billion. 98,000 crore worth of deals, including the one being announced now, Adia, Abu Dhabi Investment Authority, putting in over 5,000 crores for picking up about 1.16% stake. This is the 8th such transaction, and the second transaction where a sovereign wealth fund. Earlier it was Mubadala which actually announced picking up stake. But otherwise, if you look at the pedigree of investors which are coming in, General Atlantic, Silver Lake, all these high quality investors across the world are picking up stake in JIO platforms. So there are two things which are happening. One, of course, is that Reliance Industries is moving swiftly towards its target of wiping the debt off the company's balance sheet, which they had vowed for doing it by March 21. But now it appears it will happen in this calendar itself. The other thing which is happening is that the complexion of company from an oil major conglomerate is completely changing into a technology-run company. Best in the line with FANGs. Surely the size may be smaller, just about $130 billion worth, versus FANG stocks of $200 billion upwards to $1 trillion. But the complexion of the company is going in that direction because of JIO platforms. So it's becoming a blend of technology, media, telecom, AI, e-commerce, all of that kind of a play, and that is where the big marquee investors are looking at JIO platform in a new light, and that's the value unlocking which is happening as far as these transactions are anything to go by. So another positive news coming in for shareholders of Reliance Industries.
All right, thanks for that, Ajay. But switching gears from technology to transportation. The number of trucks moving freight has doubled to 2 to 2.5 million in May from the previous month. This is clearly indicative of the resumption we're seeing and the partial lifting of the lockdown as we enter Unlock 1.0. Now, capacity utilization was 30 to 35% in May, with the transport of essential goods, including medicines and specific food items. However, there's a but over here. The fleet operators say that unless economic momentum gathers pace, many transporters may be forced to hold up in the next few months. So you're not just getting enough business anymore. You've taken out loans to buy these trucks. And if business doesn't pick up, you're going to be stuck servicing this interest, and it's going to be very difficult. We've been hearing from numerous banks about the huge default that could come with auto financiers, specifically in the HCV and trucking segment. So we'll be eyeing out for this pretty closely as well. But let's bring it back to the markets. And the FIIs are back in India, and back with what a bang. According to this report by ET, foreign funds invested nearly 40% of what they sold in the entire month of March. And this has all been done in the last 7 days. So the Federal Reserve has been pump priming, and the gradual reopening of the economy as well as reviving sentiment. And these are the two forces together which is really working for a large FII comeback in India. And you can just see what it's done to our markets. And now 40% of what they sold has already been bought back. So really, and if you look at the global cues right now, it should be happening this week as well. So we'll be keeping an eye out for that. Okay, coming to Manrega demand. Now, Manrega has set new records on the number of person days of work generated and households benefited under it in May. The number of households covered under the scheme shot up 31% YOY as a reflection of their efforts in the past month to 28 million. Uttar Pradesh, Chhattisgarh and Madhya Pradesh saw the highest jump in job demand, and these states have also seen a large influx of returning migrant workers. So definitely some positive cues coming out of there, what was previously quite a challenged area, and this is showing what the government efforts have done, right? Now, okay, let's finally bring it across to the pharma sector, one sector which has also been in focus. According to an ET report, it seems Astrazeneca PLC has made a preliminary approach to rival drug maker Gilead Sciences about a potential merger. My colleague Pankaj, who tracks the pharma space closely, is joining in now with more details. Good morning, Pankaj. Welcome to the show. What does this mean, and could you walk us through it, please?
Right, Varun. So this is a very, very interesting development when you talk about global pharma space. Again, would like to highlight this is something we're picking up from the global media space, where there could be a potential merger in two large pharma companies. First is Astrazeneca, and they have said to be approached Gilead. Remember, Astrazeneca is one of the largest companies in terms of market caps, the sort of drugs that they have, and Gilead, of course, has been in news flow, and that's because of the sort of potential work that they are doing on corona research. So that's something which is keeping both these companies active. AstraZeneca has a market cap of $130 billion. Gilead has close to about $100 billion in terms of market cap. And if this merger happens, it would probably create one of the largest entities, when you talk about the global space. But again, this is an informal approach that we are picking up. There has been no official decision regarding this. Probably, seeds are being taken or, some talks have happened between the two, but nothing, which can be concrete at this point of time. Anytime if this sort of a merger or the size at which this is happening happens, it will be something, which the street would look at a big consolidation in the industry.
All right, Pankaj, always a pleasure to have you with us to walk us through what these larger pharma deals mean. Thanks for that. But switching gears a little bit to a story that my colleague Parisha also covered, but she's not with us this morning. The SERO survey results are expected this week, and this is vital for understanding how we are doing in terms of the virus. Now, the findings of the SERO surveillance report, which will show how widely COVID-19 has spread amongst the general population, will be announced in a week or so. The findings of this report will be pretty key. The ICMR has received data from 64 out of the 70 districts in which the survey was conducted. And the survey is near completion. These results from West Bengal are awaited, and these results specifically were delayed because of the cyclone which we saw last week. So it'll be really interesting to see how the progression has been, how we're dealing with it, how the various states have combated it in their own right. And like I mentioned earlier, my colleague Parisha will be bringing us all the details regarding this specific story. But onward to the coal exchange, and this could be one of the most exciting developments in the coal sector in a very long time. Not only are they letting private players enter, they are now looking at a coal exchange, so where derivatives will be traded. So Mobina, my colleague, who is the expert on the coal sector, is now joining in with what it means and what it could potentially do for the sector. Good morning, Mobina. Welcome to the show. Take it away.
India is planning the country's very first coal exchange, and all of this is in a quest to throw open the coal market to the public. So what this essentially could look like is what your commodity bourses look like, or even the power exchanges look like. In line of that, there's going to be something called as the coal exchange. Of course, this is an ET report and the discussions are at extremely early stages, but it looks like it is in the works, and that too just ahead of the auction of the 50 commercial coal blocks to private players. Remember that the Coal India monopoly is coming to an end, and India is going to be now seeing many more companies commercially buy and sell coal, or rather just mine and sell coal, to other parties. So hence the coal exchange. Of course, coal consumers, coal traders are pretty pleased with the move. However, you have to ensure that there are enough buyers and sellers on the exchange to ensure that there's sufficient liquidity for coal as well in the market. Now, of course, just to put it into perspective, the FSAs that miners used to enter into with Coal India, that could perhaps be replaced by these coal exchanges. Again, what this also brings on board is not just transparency of pricing via this platform, but also plain old efficiencies and cost savings as well to a certain extent in terms of logistics, etc. And hence, I suppose many steel players, power players will give this coal exchange a thumbs up.
Well, that was Mabina with what to expect from the coal exchange, and we'll be looking out to hear plenty more on this development. But bringing it back to America, it seems the ground is really shaking beneath the feet of the current President Donald Trump. He's now facing a lot of opposition based on the poor handling of the recent George Floyd killing, as well as the police protests and the community protests to the police, and how that whole situation has been dealt. You now have several leading Republicans, even the former President George Bush coming forward, Colin Powell, and some of them are now saying that they're going to be voting for Biden. And this is the first time Republicans have actually come out and openly said that they'll be voting for Donald Trump's opposer, even though he may be from the Democratic Party. So it just goes to show that despite all the stimulus he's doing, the US markets are rallying. The social condition is what people are not happy with, and they're definitely raising some complaints. And that is likely to affect the polls, which will also be keenly looked out for as the presidential election, comes closer and closer. But so that's what's happening with Trump, the US, and the protests. Let's now look at what's happening in New York. And I really find this interesting because New York is a good comparison to Mumbai. I feel very large cities, heavily industrialized, very large population. The worldwide death toll from COVID-19 surpassed 4 lakh on Sunday. Worldwide, at least 6.9 million people have been infected by the virus. In Latin America, over 1 million people have been affected. And let's remember, Brazil is the worst over there. 60,000 deaths have been reported in Latin America. Total US cases are now approaching 2 million, the highest in the world, followed by Brazil with 6.72 lakh cases and Russia with 4.67 lakh cases. So that's kind of what's transpired with the US, Latin America, and how the cases and deaths are kind of progressing. So with that, I believe we are now reaching the end of the COVID update. Let's get you a feel for what happened in the Times of India this morning. We have 5 main headlines out of here that we'd like to bring to your attention. The first being that 10,700 new cases have pushed the national tally to over 2.5 lakh crore. The fatality rate in 13 districts is higher than the state average. In a first, best buses are to run across MMR. Banks reassess loans. Home buyers are in a soup, so there's some restructuring going on. And call on international flights when nations ease curbs is coming out of Hardeep Singh Puri's commentary. So we'll be hearing something about the international flights fairly soon. We now have a little ET Q&A and finding value in emerging markets. Value plays in emerging markets are often value traps. So you should chase disruptive innovators, and that's the word coming in from Sanjay Shah of Morgan Stanley India. So that's just something to keep an eye out for as well. All right, now Mr. Uday Kotak was addressing India at the CII conference over the weekend. He spoke about what's required, what the government has done already, why he believes the RBI has already done a lot, what's very important in the moratorium and interest. Many interesting insights over here. Let's listen in.
Markets are making a judgment about the future.
Okay.
And most of us in the real world economy are looking at the present. Okay. And the present is dire. Present is, lockdown, supply chain problems, containment zones, red zones, orange zones, green zones, all the issues which we are looking at today, which is what you report on a day-to-day basis. Marketplace is saying something which is different. It may be right, it may be wrong. But what is the hypothesis of the market? And I think it's important for us to spend a minute or two on that. The market is saying, and you talk to investors and analysts, which is what I have been doing in recent times. The core of the message is for earnings of companies, the analysts are saying 2020-21 is a washout. We are less concerned about 2020-21. We are looking at earnings of companies in 2022 and 2023. And we are making our assessment and estimates of that and basis which we are buying today. Apply the same principle to our GDP.
Okay.
Just as there is an individual stock, think about India as a stock and look at our GDP. We know this year's GDP is under pressure, maybe even negative. But think like investors and analysts. What are we doing as a country in terms of our policy and decisions? That medium-term GDP, that is 2022 and 23, gets back to higher trend growth.
Right.
If we get that right, the stock called India will do well. And if we do not get that right, the stock called India will find it tough.
All right, in an exclusive interaction with Nikunj Dalmia, Rajneesh Kumar of SBI discussed a great many things, his Q4 outcomes, moratorium, interest, markets. Let's listen in.
So let us first understand it that this moratorium, where there is a disruption of the cash flow, whether it is individual or businesses. In such circumstances, globally, in all regulators, and the regulators who are also supposed to be as tough as our Reserve Bank of India, whether it is US, whether it is Singapore, whether it is European regulators, everywhere, realizing the situation, some dispensations have been given. So credit culture would be impacted by this moratorium. I don't subscribe to that view. It is a realization of the ground reality, and it is a realization of the fact that people want to pay, but if there is a disruption to their cash flow, which is not in their hands. So in such circumstances, it is logical that repayment is always aligned to your capacity to pay. And this is a realignment to their capacity to pay. It is not about intent. That is how I view it, and I don't think that this is going to impact the culture. The people who don't pay, they don't pay, whether COVID or no COVID. And the people who want to pay, they are paying even in COVID, and the statistics is with us, where 82% of our customers, where we have said moratorium is available, but they have paid more than 2 installments. So what I feel that we should not, at least I don't subscribe to this theory, and this is not a phenomena which is peculiar to something India has done exceptional. In fact, if you ask me, our regulatory guidelines as on date are much tighter than what they are in other countries.
Every shareholder of State Bank of India, when I meet them, they said, "Hamara din kab aayega?" So when do you think the time for SBI shareholders will come back?
Market is such a thing that whatever you do, but you can't fight the market, right? They find reason to go down. I sincerely believe that market has not been fair to State Bank for whatever reason. But as I said, that it is ultimately the choice of the investors. But if you look at our performance, nobody has been able to fault us on our performance quarter after quarter. But despite that, and this I made an observation in one of analyst meet, that somebody sneezes and people feel that State Bank will get flu. But that's not the case. So can't help it. But the fact of the matter is that if you look at our balance sheet today and the size of the balance sheet and the earnings, there is no reason that our stock should have gone down in value so much. But I have no capability or capacity to, deal with the
There you have it,
market.
Rajneesh Kumar reminding us that markets are markets and they give you whatever value they feel is fair. But on that note, completely out of time here in the newspaper show. Thank you so much for tuning in.